You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to watching the Financial Survival Network, and well, real estate is still in a major upswing. Prices continue to go up, inventory extremely low. You've got situations galore of people overbidding just to get a house. It's a virtual panic out there, but not everybody is making money in real estate. Zillow, you know them well. They're the Uber listing company, I would call them, and they've been trying to squeeze out realtors for years. Now they've figured out a way to lose money, and to lose a lot of money in real estate, in house flipping. It's like they watched Flip This House in reverse, where you start with a lot of money and then you wind up with a little money at the end. I think they watched the wrong show, but here to educate us, explain where Zillow went wrong is our good friend, Debbie Bloyd, mortgage broker extraordinaire. Debbie, it's great to have you back on the show. So how do you it's like the old saying in Las Vegas, if you want to make a small fortune in Las Vegas, start with a large one, right?
Exactly.
And that's what Zillow seems to have done here.
Well, I think they did not realize, we all realized that they were really messing up the market. And it wasn't the market so much they were messing up people's expectations of how business should be done. And so, we are old school real estate agents, lending people. You have to stay within the market range, and people can't get taken out of the equation because there's just so much that a person needs to do. It's not all algorithms. And so kind of what we're seeing now is what happens when you listen to and pay attention to only technology, no people involvement. This is kind of what you get.
Hey, so, like they have this thing called a Zestimate. All right. Yeah. And that is like people look at it and really believe that this is the be all and the end all, that this is you should pay this for the house and not a penny more.
Zillow says so. Yeah. Zillow says.
Yeah. It's this so-called AVM, automated value mechanism, or whatever it's called. And
right.
It's like, hey, but this house has a pool, but this house has a brand new kitchen, and this house is a wreck and needs to be completely gutted and renovated. But Zillow, their algorithm, doesn't know any of that. So yes, they can give you a guideline at best. And then when you have rising markets like this one, they've got my house valued at exactly what, actually, I saw something I'd never seen before. I bought my house back in June, and I had gone to contract in February. So the value had gone way up in that 5-month period. And they actually said they didn't have enough data to figure out what the house was worth. Have you ever seen anything like that before?
Yeah, because everybody is doing these algorithms. So a lot of people, before Zillow came into being, everybody would say, well, my county tax assessor says. Well, Dan, they just drive by the house when it's being built and say, well, there's a house there and all the other houses cost about this much. They don't go inside. They don't know how you finished it out. They don't know what those finishes are. They don't know if you've got carpet, shag carpet, laminate, hardwood floors. So everybody used to say, well, my tax base says this. I'm like, well, that's a big fat lie. They don't know what it is. Uh-huh. And then Zillow came out. I'm like, well, that's a big fat lie because they're not in your house. A true appraisal is the only way to know when you're comparing what has sold around you that's like you. And it has to be like you. It can't be built in the same year, renovated versus non-renovated. So you really need the people touch in there.
Yeah, like I see houses, they've been renovated to the hilts. And then I see a house next door, it's 30 years old, it's like falling apart at the seams. And yet the 30-year-old unrenovated house, it's got 50 more square feet, and Zillow values it at 50 times 200, so it could be $10,000 more. But the reality is there's a huge disparity, and they just can't know this. So Zillow got into the house flipping business. They should have hired the guy from Flip This House or Flipping Vegas or Flipping LA.
Yeah.
But I think they got some geek who was locked away for 20 years in the computer room, and he got his chance to get out, and he was just spent. Well, obviously, the way you lose money in real estate is to overspend, right?
Right. So those algorithms weren't right. And we knew they weren't right because, we could tell people your house is valued at $350,000. Zillow, but I'm going to take my one touch Zillow button and it's going to give me $385. Well, okay. I mean, for a seller, straight up, you did a great deal. You got overpaid for your house. But what they were going into a lot of neighborhoods, and a lot of people were doing this, it skewed the numbers. So how we're going to see this show up is when we go to sell those houses. So that person, so Zillow bought it for $380. Now, what are they going to sell it for? $380? Or are they going to go back to the price of $350 where it should have been to sell that, and how much of a loss they're going to take? So that's what we're going to see now is how much losses can they survive? So they're a technology company. They're not a real estate company. That's the big thing about all of these search engines and stuff. It's a technology business, and it just got applied to real estate, but it's technology, pure and simple. It's not real estate, it's technology. So you can do any kind of technology and apply it. That doesn't make it right.
Yeah, I think you nailed it there. And the coolest thing would be if they buy somebody's house and then the person comes back and buys it back from them for less.
Yeah, wouldn't that be nice?
I'm sure that's going to happen, right?
Well, I'm sure there's going to be something in the legal terms that says it can't happen. But it's going to be funny how those houses are appraised coming out, because once you sell the house, even if you sell it to Zillow, then that is a new comp. Doesn't matter who bought it. So now the comp's up at 380.
Going to depress the market.
Now you're going to buy it below market. It's going to take a while for that market to adjust back down. So if you sold to Zillow, congratulations, you got a great deal. If you're buying from Zillow, are they going to be selling at those inflated prices or go back to normal stuff and just take a hit for it? I don't know.
No, they've already taken the hit. So now I think the geniuses in the C-suite at Zillow are just looking to cut their losses and get out of a business that in the final analysis, Debbie, they should have never been in the first place. And maybe it's a wake-up call that, maybe brokers do play an important part in the process. After all,
people, you've got to have reasoning, like with a brain. Now, not all of our clients reason well. So I can't say that everyone has good reasoning skills. But as real estate agents, and I'm still an agent and a mortgage broker, I see people do ridiculous things that make no sense whatsoever. And eventually it catches up to them. You do want some of my clients, I do want them to take an offer. It's the best one it's going to get, and they get greedy. So they're a problem. Then there's the people that think they know more than an agent and they go without representation. They end up getting taken advantage of in the end too. So you really just need another set of eyes out there. You need to think strategically, but not like a greedy person. Those greedy ones get slaughtered.
Hey, well, we always had a saying in the legal profession, and that was that it mainly dealt with people going to bankruptcy court. They went in as a pig and they came out as sausage, and that's what happens in real estate.
Yep. So we need more people in the transactions. And I think it's going to go back to that. Zillow was only a technology company, just like Google is a technology company. But there are going to be some new ways to do appraisals that are coming in the next few years with digital platforms. So I'll be able to go into a house as an appraiser, let the camera do the shooting of a house, and then upload it to an appraiser. So we're going to have something kind of mixed between the two of these. It's going to be people and technology, just not all technology.
All right. Well, that's interesting. So what are you seeing in the marketplace now where you are in Texas? That market has been lightning hot, just like here in Florida. Any let up one thing I've noticed is you're starting to see price cuts.
Don't just survive, thrive. The Financial Survival Network.
Dore Copper Mining is a premier, near-term, high-grade copper and gold redevelopment opportunity with tremendous exploration potential only 14 kilometers from the town of Chibougamau in mine-friendly Quebec. Dore Copper is debt-free and owns a 2,700 ton per day mill with an 8 million ton tailings facility ready to be used. There is already power to site and it is accessible by paved highway and rail. Dore Copper aims to produce a profitable hub-and-spoke operation of over 100,000 gold equivalent ounces per year or over 60 million pounds of copper equivalent by 2024. Because of the existing infrastructure and location, a low capex is anticipated to recommence production. Dore Copper trades under DCMC in Toronto and under DRCMF on the OTC. To learn more, go to dorecopper.com. That's dorecopper.com.
This is the Financial Survival Network. The information you need to thrive now more than ever.
Well, you're getting to see price cuts because people got greedy. So when you see everyone paying, $50,000 more for your neighbor's house than it should have been, you're like, well, heck, I should sell my house for $50,000 more. And so now the market is done two things. People are wearing out. People are tired of writing 20 contracts to only get one. And they're tired of walking around looking at houses with 22 offers. I was at an open house last weekend, and it's strategy of the agents. An agent priced a house $50,000 low, Kerry. Mm-hmm. So everybody in all of Frisco came to see this house. There must have been 200 cars at this house. So they're going in low. So instead of being a $400,000 house, they priced it at $350,000. Now they're going to take bids on it through the weekend. There's only like 400 people going through this house. So prices are going to be well above the $400,000 range because of the bid system. Had they gone in, did an open house, priced it at what it should be at $400,000, they might have got 5 offers. Now they're going to get 25 offers. So some people are tired of the game. They are not geared for the game. These are consumers that just want to go buy something and leave. They don't want to play. Do you know how stressful this is for people that are not in the business? They wig out about everything because their levels of stress tolerance is at an all-time low. So they're stressed out about everything. They just can't take it and they walk away and they say, I'm done. I don't want to play. So they go and rent for another year. They're thinking it's going to calm down. It's going to be a bubble. They're just ill-informed about the whole thing. This is no freaking bubble. This is real money coming in from real other cities, moving the whole market up. So if they think they're going to get a special deal next year, they are sadly mistaken. Rates are going to go up. The houses, because of all the comps, are going to rise up. So houses are going to cost more next year from an interest standpoint and from a cost standpoint. So they are wrong, more wrong. And they're not knowing the market and how things work are really going to hurt them in the end. So we have a lot of people that just have given up and people that'll start next year, but the new home builders can only build so fast. They're out of supplies, they're out of lumber. If they have not pre-ordered a lot of stuff in, they're going to be behind. So I have a new house being built and they said it'll be built in March. It'll be done. And I'm thinking, probably May, June. But they did pre-order everything in. So the lumber's there, the shingles are there. They've ordered the countertops already. I could be in by March just because that builder pre-ordered while there was supply. They're a big national builder. So the smaller guys can't do that.
Yeah, and you could see that house goes up in price dramatically too, because the price of lumber, copper.
I had to buy now. It's going to be more expensive next year.
Yeah, so, copper is new records. So
and you're out of real estate. So a lot of these areas, people want to be in new, nicer homes that are already move-in ready. They're out in the suburbs and there's only so much land and it's getting further and further and further out. So if you work from home, you don't care. But if you go into an office, you care. So the bidding is higher now, inner city and inside city limits and highways and byways, then you can get affordable if you want to drive 30 minutes further than you would now.
Yeah, sure. Yeah, well, we see that. And what have rates been doing lately? They seem to be pretty steady, down a bit.
They're steady, but the Fed's not going to keep them down. So they're going to go up. So next year, they'll be probably a point by the end of next year. So they're going to climb a quarter, an eighth at a time. Inflation's going up. So I just came back from a United Wholesale Mortgage, one of my biggest lenders. They're the largest mortgage lender in the United States for brokers. And they're like, the rates are going to go up, but they're expanding the things that they have to offer us. Technology is a big deal. We're getting people in faster. We're just not going to be able to do anything with the rates. People, those 2% are going to be gone. You can buy down to get there, but most people don't want to pay points to get there because they really don't know what's happening in the next 5 years. They don't know where they're going to be in 5 years. So they're going to be paying more.
One thing that's really working in inflation's favor and in home buyers' favor is inflation. And the thing is, back in the 70s, we had stagflation and real estate prices really didn't go up much. It wasn't until the 80s that they kind of took off because rates were so high that home affordability was down. Here, people kind of understand the game more, even though they don't remember it, and most people weren't alive during the 70s to experience stagflation, or they don't remember. But back then, it was like you bought stuff because you knew it was going to be more expensive in a week or two. And we're getting to that point now, and the best thing you can do there is have a 30-year fixed mortgage, because in the beginning of the 70s, the average mortgage was like $350 a month. That was your debt service. At the end, it was over $1,000. But the people who nobody refied back then.
No,
like unheard of.
It wasn't a
right mind would refi.
Right.
But at the end, it was triple that. And the person who was still paying $350 actually had, assuming their income went up just at the rate of inflation, nothing better. If their income stayed even, their housing costs was a fraction of what it was. It was like 2/3 less. And that's what my friend Jason Hartman calls inflation-induced debt destruction. And if you can do that here, it's a really good time. I don't know how many people are expressly using that strategy. I know I am. And even if you can afford to buy something, if the rate's low enough, that your real rate, we're looking at 6.2% inflation as the Fed defines it, Debbie. Yeah. And if your mortgage rate is 2%, or just call it 3%, you paid high, 3%, that means that your real rate is minus 3%, which means that every year your principal, your debt, actually goes down in real terms. It's pretty amazing. It's negative interest rates, putting them to work for you. So people want to find out more about you, Debbie. They want to connect with you, find out what you're doing. Where's the best place to go these days?
Probably my website is moneystrategieswithdebbie.com. I do a podcast too and a radio show. And so I talk about these things every day. I would love to hear from people. You can message me on there.
All right. Excellent. There's a link in the show notes to this interview on financialsurvivalnetwork.com. Make sure you sign up for your free newsletter. Debbie, always a pleasure. We'll talk to you again real soon.
Thank you.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.